What's going on, world? Welcome back to another episode of Insightful Principles. I actually have a special guest that's been on the show here before, Alex Cole. For those of you that haven't heard of him before, he came on my channel on episode 47, and we talked a lot about just things that you can do to get prepared for if a financial crisis were to happen and when the next one will happen. So a lot of that conversation was more of us giving you just some different ideas, whether it's investing in gold, hard assets such as real estate, and even Bitcoin. But with this episode, I wanted us to really focus on the growth of what we're seeing with cryptocurrency, and really going into some details about Bitcoin mining and also just the Lightning Network. So we have a very special episode outlined for you all. And before we get things started, how's it going today, Alex? I'm glad you're here on the show.
Yeah, Kevin, it's great to be back in the studio with you. It's been, I think, 4 or 5 months, and it's just so much has happened, in this conversation since we last spoke. And I'm excited to get back into the weeds this time on, Bitcoin, blockchain, and the Lightning Network.
Of course. So to get the conversation started, I know that you had the opportunity to go to the Bitcoin conference in Miami back in June, and that kind of gives a lot of crypto enthusiasts that are in the industry or even have an interest in the industry. They all come together, and it's just a big panel of different speakers, and they're really just talking on a lot of different ideas and just concepts of what's happening within the industry. So I would love to get your perspective on, what you took out of the conference. What were some things you might have learned and some things that kind of stood out to you?
Yeah, absolutely there. That conference was amazing. I can't replicate the energy and the enthusiasm that we saw that weekend. I mean, it was the largest Bitcoin conference they've had. As time goes on, they get bigger and bigger. 2020 was canceled, so I think some of that momentum and that burst of energy we saw carried over to this year. Even though it's middle of June in Miami, hot as hell, but it was an amazing experience. I mean, people from all over the world. When it comes to backgrounds, age, demographics, ethnicities. We saw the whole world come together in Miami to focus on Bitcoin. So I really can't kind of capture it in this little segment of how exciting it was to be there and part of that. But the panel of experts on Bitcoin, speakers that had that week and weekends, were just incredible. From Anthony Papuano to Kevin O'Leary, from senators to Bitcoin, OG enthusiasts like your Max, Max Kaisers and those guys. People from all walks of life were there and just talking about Bitcoin. So it was cool to see that. It wasn't just the original Bitcoiners that kind of came out, some of the OG plebs and those kind of guys. It was, politicians, Wall Street, everybody was there. So I'll say some key takeaways I noticed. Some of the most common themes. Obviously, there was a variety of topics they discussed and went through. Some of the big ones were like, some of the environmental issues. They were talking about sustainability, talking about governmental, regulations. Some of those topics were probably not as discussed and talked about in previous years, but I think this year, with regulation kind of being on the forefront of people's minds, also as you get widespread adoption and institutionalization, you see some of that discussion on environmental sustainability and concerns of, what is this energy being used for and how can we contribute to, providing sustainability and growth. And so that was Kevin O'Leary's main topic that he discussed that week. But there's quite a few others that actually touched on that as well. So, there's so much there.
Yeah. I could imagine it was just so much wealth of information. And you talk about Kevin O'Leary, he's in the industry, very in depth. I actually listened to a recent podcast that he discussed, and he is really taking an approach of his balance sheet where, of course, he has a certain allocation towards like Bitcoin, but he's also focusing on stable coins. And I really thought that was an interesting approach. And his whole thing was he's no longer putting his money in fiat. If he's storing his money where I look at a stable coin related to more of like a savings account that you would have with your bank, but rather a stable coin is kind of something that you can put on the sidelines, and it's not volatile. It doesn't really move with whatever the crypto is doing, but it's kind of just money that's just sitting there. So can you kind of touch on your approach as far as with stable coins? Are you a person when it comes to being an investor of crypto? Do you believe in putting some of that in stable coins if you're not wanting to deal with as much as the volatility? How do you feel about that when it comes to stable coins?
I mean, obviously Kevin is a vet investor, so he knows what he's doing when it comes to allocating assets to certain buckets and portfolios. I like that approach because there is some, if you look at the dollar, for example, with inflationary times like these, widespread, mass printing, and also the supply being so high with, we're not shutting these printers off. They're just going to keep on running and running until we don't even know what happens in the future of inflation. But, we saw a 5% inflationary increase this year. I do think some of that stablecoin investing can hedge against that erosion of the dollar. And partly being because, let's say you're not growing that asset. Let's say it's not your Bitcoin, it's not your Ethereum, it's not a very high growth potential, but it's a stable, form of monetary, hedging. So you use it as a way to just hedge against deflationary times. And for this example, a dollar format is completely being eroded. So I think his practice of doing that makes sense because you're not making a lot of money, but you're also not losing your wealth. You're preserving it in a way that can transcend to the future and not just another 5, 10, 50% decrease like we've seen the past year. I'm not a huge investor, I'll be honest, in stablecoins. I hold other assets, and I would say even my conviction for Bitcoin has grown even farther this past year and a half. I've been a big fan since I got in back in 2017, but I think as time goes on and I see the way they adopt the network and the way they use Bitcoin across the world, I think my conviction gets stronger in Bitcoin. But I do see this idea of, putting money into stable coins just to keep things flat and preserve wealth as a way to, de-hedge from the dollar and inflation. So,
yeah, the way I look at it is, because I agree with you. I'm more of, I'm investing in Bitcoin and Ethereum and some of the other coins that I feel that have a lot of great use cases. But the benefit that I see with a stable coin is, it's better than putting a portion of your money in that in comparison to just leaving it in the bank. Because like you mentioned, with the inflationary concerns that we have now, and I think that when you think about the banking system is, they're only flipping your money. They're not in your best interest. You have to really look at other ways of how you can at least preserve your capital and also grow it. So, I definitely think that, I'm learning more about stable coins. I know they have some like Tether, which is backed by the US dollar. But I'm curious to know exactly how that relates into, if inflation affects the dollar, does that affect that stable coin? So that's one thing that I'm trying to learn more about. But I still think the stable coins, there are some that, is a way to kind of park your money, so to speak. So definitely a good way, if you're wanting to try to get your money more away from the bank and store it in something that is not going to decrease with inflation. But I wanted to discuss blockchain. I think that when it comes to people out there that are learning about crypto for the first time, a lot of times is more of a, I feel like a lot of times what we see in our society, people are making decisions off of, hype. They see a tweet or they see something on CNBC. And I think that the education behind really understanding the technology behind crypto is how you're going to be able to develop and make a smart investment decision. So for an investor out there that's learning about crypto for the first time, in your own words, can you explain what the blockchain means to you, and just your understanding of how the technology works with cryptocurrency?
Yeah, absolutely. It's one of those things that's pretty tough to summarize in a quick synopsis. It's very in depth.
It is.
I learn every day about new things and new ways in regarding the blockchain, how it can be used, and also the pure functionality of it and what makes up the blockchain. But to kind of break it down, it's really just a data system that is used for storing information. So it's recording information constantly in the form of data blocks. And so these blocks are made up of records. And so you have records of transactions going back and forth constantly. Computers are taking that information and they're validating it through the network and then creating these data blocks, hence the name block. And then they're partnered together in the form of a chain. And this chain is chronological, so it's building constantly upon itself. It's always evolving. It's always building block by block. So if you look at it as, you compare it to other data systems, I mean, it's digital network, and so that ledger is online and it's accessible across the world. It's verified by computers and nodes that are distributed across the world. That gives it a decentralized component. And so, most databases, whether it's your company or my personal spreadsheet on my laptop, or that's something that I have in my possession that is centralized and in-house. The unique part of the blockchain, and particularly Bitcoin, that network, is that it is decentralized and people can access it, they can view it, and they can use it real time. So comparing that to other systems, I'd say that is what makes it different, the blockchain network, compared to other databases we've seen with technology.
The best way that I understood blockchain is that it's really a data, record keeping system that's on a decentralized ledger, and all of the transactions can be validated amongst other people that can see the network of Bitcoin, the buying and selling on the blockchain, with whichever crypto it is. So that's kind of the best way that I kind of understood it. And like you said, it's immutable, it's self-sovereign, and it just creates, a decentralized network where everyone can verify the transactions. And that's really the beauty of it. And, I actually wanted to also ask you, what industries did you feel like are going to benefit the most from blockchain technology? I feel like there's so many I've read on, but kind of wanted to get your opinion on, what do you think, what industries could benefit the most and will be impacted by blockchain technology?
Yeah, of course. I mean, just kind of but just going back to the blockchain piece. I mean, there's just so much that is evolving with even that technology. I mean, what was it? What was Bitcoin in 2011? Like, no one knew what it was. Is this thing tangible? Now we view it as pretty much digital real estate. That's what they're calling it, or they call it energy money because it's being created by energy and used across the electrical component as in creating more energy. So it's fascinating to see this, market evolve and the industry itself just transform as we go on. I think it can be applied realistically to almost any industry. I mean, the big ones that stick out in my mind that kind of obviously pop up are finance, healthcare, any kind of supply chain system, whether it's record keeping for inventory products, tracking contamination at a food facility, products across the country and the world. I think those are the major industries we see use it. Finance and servicing being one of them, one of the biggest ones, but it can be transposed across banking, small to large. I don't see any industry that couldn't apply it in this case, because that's just, the use cases alone validate why it's being able to be used. It's not just a form of money or transfer of payment. I mean, that's a huge aspect. That's why I love Bitcoin. It's a monetary system. It's real estate that is pretty much digitized that I own, and it's not, you don't think it as physical because we can't see it on a hard drive, but the fact that I can pull out my hard drive or cold wallet and take it anywhere in the world, it's something that I physically own. So that's the monetary aspect of it. But when you involve, smart contracts or other use cases, I mean, you can use it for, they're talking about voting platforms, verifying voting transactions on a ledger, digital IDs, real estate deeds and contracts, whether it's, in that industry or somewhere else. I mean, use cases I think are pretty prevalent everywhere. So
yeah. Another one that comes to mind is just medical records. With healthcare, especially with people that work in either life insurance. There are different documents and statements that they have to actually get from the doctor to be able to look at the suitability of if they will be able to cover that particular person and what their coverages are going to look like. So they have to look at their health and all of these different aspects. And I think that, you know, with medical records being stored on the blockchain, it's going to make the process a lot faster where a life insurance agent or even someone like you mentioned working with insurance, when they're having to call these doctors or these receptionists to retrieve records, a lot of times those lead times and the time that it can take for you to actually get the document you need to process the transaction, it can take months. So I think that, you know, with the blockchain, it could speed that process up. And that's why I think that the world is just really going to evolve to us using this on a regular basis. Like, that's why I tell people it's more than just crypto. It's the underlying technology of the blockchain that's going to completely just transform the way we go about just doing business day to day. So I see a lot of benefits, and I think that it's going to probably take some time for people to really, I guess, industries to really realize the potential for this technology. But I think we're going in the right direction. There's a lot of adoption, and people are starting to wake up and understand that this can be a lot faster. It's more security, and it's just a lot better for just the processing of transactions. So I totally agree.
100%. And back to that medical record, you know, topic, that's one application and one major industry that needs, for one, security. It needs, you know, ease of access of information and transferability. I mean, you go to one doctor and then you go to another doctor for a different examination or checkup, and they don't even communicate. There's no communication between the network of doctors and different physicians, and there's just so much that could be securely transferred across the network, keeping privacy, but also allowing the access of those two parties to talk, communicate. So I think, I mean, healthcare alone, you're looking at a multi-billion to trillion-dollar industry.
Yeah,
I mean, that's one subset of the entire world, and so. And then you look at, I know Greg Foss and others have talked about this, but there's like 900 trillion in assets across the world. I mean, look at the oil industry, look at bonds, look at any of that. You capitalize on one of those markets and digitize it. I mean, it's profitability's there. Money's there. So it's exciting to see. It's very exciting.
Yeah, it is. It really is. So I kind of wanted to get your approach when it comes to just the analysis aspect when you are, you know, looking into just when you first started investing into Bitcoin and Ethereum and some of the other coins that you're invested in, how important is like fundamental analysis to you? Do you ever look at like a white paper for a cryptocurrency? And for those that don't know what a white paper is, it essentially describes the use case for the technology and just what the purpose is of the technology is. The best way that I look at a white paper is kind of like how I'll look at when I'm looking at stocks. I may look at the financial statements or maybe an overview of what the industry that the stock is in. That's kind of the best way to compare a white paper in my eyes. But kind of wanted to know your approach when it comes to fundamental analysis. And do you feel that that is important for an investor out there that wants to invest in this industry, really taking that proper analysis to understand the use cases?
I agree. I think you should always, with any kind of investment, whether it's property to stock to crypto, I think you should always take an approach of you're doing your research and analysis, and the white paper is a great place to start. It's their business plan, it's their proof of concept, it's their idea of what they're going to solve within that problem. They're daunting. I mean, if I've read through some white papers, I can't say I've read them all. I've invested in things that I haven't read. The page 1 to 1,000 of the white paper. I just was going through the Lightning Network white paper recently, and there's better ways to probably gather information, whether it's synopsis, like shorter articles or videos, stuff like that. But if you want to take that deep dive, I think, to your point, the white paper is the most comprehensive and thorough document you have a chance to read. And that's part of the fundamentals. I mean, I think you should look at that. What are they trying to solve? What is the use case? And how is it being applied? And so some of these don't have the application, they have the idea, the concept. So you just got to balance, what is the market they're addressing, and then what is their chance of actually achieving that goal, and what kind of entrants and competitors are entering that market as well. And so in this space, there's a lot of phonies and frauds. You gotta, I'm being honest, you gotta do your due diligence, and make sure you're investing in the right things. But with different platforms, we've seen stuff pop up that are just scams and chilling, basically trying to gather money and not even provide any kind of product or proof of concept. So you just got to watch out for that.
Yeah, I agree with you. I think that that proper analysis is what allows you to make a good investment decision and not invest in, what they like to call trash coins or just coins that don't even have any value. You gotta, you can't follow the noise. You can't listen to what everyone is telling you. Don't ever buy the hype. Do your due diligence, like Alex is saying, and do the research and stick with the coins that that have value, that you can really research and get a better understanding of how the technology can be used for businesses. And that's kind of how I make, smart investment decisions, really looking at what problem is this cryptocurrency and this technology trying to solve, and that will most likely lead you at least in the right direction, the right path of understanding what impact it can have with businesses. So I actually wanted to transition and really talk about some of the major projects that we are seeing happening within the crypto space. And one that I wanted to talk about specifically, you mentioned it, was the Lightning Network, and how that is essentially going to provide more efficiency with payment transactions, across anywhere in the world. So I kind of wanted to get your opinion on how do you feel the Lightning Network with Bitcoin will bring some improvement to layer 2 with their blockchain, and also if you could probably explain the difference between layer 1 and layer 2. I know some people may be for the first time hearing about exactly what that is. So if you can kind of touch on that as well, that would be great for the audience.
Of course, Kevin. Layer 2 is probably one of the most exciting projects we've seen being built for the Bitcoin network. We have Taproot and other ones coming into play, but Lightning 2 is that scalability model. It's the way to take where we are with Layer 1, slow, higher fees, slow turnaround time, that kind of stuff, transactions per second, and get to that next level so that, like they announced at the Bitcoin conference, El Salvador is going live with Bitcoin being their monetary system, which is, that's mind-blowing to think a country's going to adopt this. But with that, you need some faster speeds. You need the ability for micropayments. So let's take a step back and talk about Layer 1. Layer 1 is just the Bitcoin network that was built initially. It works, it functions. You can transfer money back and forth, Bitcoin back and forth to one party to another. The problem is, currently, I think the network supports like 7 transactions per second, which you compare that to Visa and other companies, that's very low. Lightning Network is a Layer 2 protocol that's being built on top of the Layer 1 network. So what that means is it's just another added layer of functionality. It's more programming, more code that will make things transact differently and faster. Since Bitcoin has grown across the past decade, they need a solution for that, and Lightning is that. It provides faster transaction fees. They're saying thousands to potentially millions eventually per second. So instead of paying more per transaction, you're going to pay less, and that'll move quicker, faster, and allow the whole network to communicate on a more efficient model. So that's just part of what it is. There's so much that goes into it. Lightning alone is bringing about, like I said, there's micropayments, which those are actually, there's an off-chain component that could be used with this network. So right now, currently, things have to be verified through miners and nodes. So the network transactions are constantly verified via this computing power, which is good, but also it takes a lot of, electricity costs and network power to verify these blocks of data. With Lightning, there's an off-chain component where, let's say, for example, it's probably the best analysis I heard. You go to a bar, you open that tab, That's a payment channel between you, the bar owner, restaurant establishment. Well, that channel of payments going back and forth the entire night. You're buying drinks. You're not paying for it yet. I didn't swipe my card. I didn't give them the final tab payment. I'm just constantly, buying drinks or buying food, whatever, and racking up that payment. And so that transaction is happening real time. It's going on. It's being happened on a ledger, which is the credit card system or whatever, payment system they're using. And at the end of the night, I'm coming back and I'm closing my tab, and that transaction is going through the system as me, Alex, paying so-and-so, establishment or restaurant or bar. And so that's kind of how you can view that off-chain analysis component. It's a real time. It's basically not having every part of that transaction verified at every step. It's taking it off-chain, which means this is going on the side. All these transactions back and forth between me, that peer-to-peer transaction, and then once it's closed out and finalized, then it gets added to the network and becomes part of the data block. And so that kind of technology, which we didn't have previously, that just adds so much more scalability to the network. It allows micropayments. I'm not going to send you a penny of Bitcoin right now, Kevin. It's not worth it. The fees are too high. But with Lightning, Lightning Network, that layer 2 protocol, that opens up doors for, widespread adoption and usability. We can use Bitcoin for small, buy coffee here, buy something there. That takes it to the next level of just providing the network usage that we need. And that will increase the on-chain metrics as well. That kind of use case of constant payments back and forth instead of just sending large sums at a time because you don't want to get it with a fee. That takes that to the next level. It makes Bitcoin highly scalable. So it's cool to see that. I think somebody transferred, was it $1 billion today for like $10? It was like $1 billion. I saw the transaction posted. It was like $1 billion for like $10 or something. That's what layer 2 is going to do, and that's a big transaction. But I'm saying on the small scale, that's the hope that's going to fix is cut down those fees and transaction times.
Yeah, the scalability of this layer 2 technology is what is going to create more adoption, I feel, with institutions. Because right now, that was one thing that I read is that, with the way the system had currently been in the past, the transactions, like you said, 7 transactions per second, compared to a lot of these other major banks, their transactions per second are a lot higher. So it's going to allow it to be more scalability, where with the Lightning Network, there's going to be more micro transactions that can be processed way more effectively and at a higher number as well. And I think that analogy you provided with the bartender, that's an excellent. I believe I heard that on Palm's podcast, and he had someone on there talking about it, and it's great because you don't have to the way it seems to me, the way it was set up in the past was you had to communicate with a miner to actually have the transaction settled, then it's placed on the blockchain. Rather, with the Lightning Network, it's just pretty much a smart contract between yourself and the participant on a pre-agreed terms, no different. You're going to the bartender, you give them your card, and then at the end of the night or at the end of the transaction, everything's settled. You don't have to go to the miner. You can directly communicate to whoever you're sending money to, you're receiving money from. So I think that this layer 2 technology, man, it's going to be amazing to see. I know that they said that some stuff I read online, they're constantly trying to build it more and more. It's not in the final phase by any means, but I believe that this is going to create more scalability for the network and also just more mainstream adoption. So, yeah, man, the Lightning Network is the thing that I believe is going to transform Bitcoin even more. Now,
so exciting.
Yeah, it is exciting to see what's going to be happening here in the future. Now, another solid project is Ethereum 2.0. Now, I know from reading about this, essentially Ethereum, they're wanting to move more from proof of work to a proof of stake consensus. And it's expected that they're going to make these changes by either the end of this year or early next year. I know originally they tried to do it sometime in 2020, at the end of 2020, but they've been continuing to work on it. So I wanted to get your opinion on how you feel about this protocol, and also explaining what the difference between proof of work and what proof of stake is.
Yeah, kind of interesting shifts, because you look at proof of work, which is the ability to verify, transactions in the network, and these are done by computers, miners, and so pretty much that creates decentralization in the aspect of you've got miners across the country and the world communicating via consensus and saying, yes, this is a legit transaction. We verified it, not just one person, but it's a consensus, approval. And so, you look at that aspect of how it's currently done through energy, through, computing power, and then resulting in Bitcoin rewards or any other kind of native token reward. And then you shift that over to the proof of stake, which is the POS system. I mean, it's pretty much saying that the largest holder of that currency is going to be part of the verification process. Those people are called validators. And so those validators are the ones who pretty much get selected at random with stake holding components. And so based on the size of your stake holding within, for example, Ethereum, you could become a validator on the network. I guess the randomness, if you look at it that way, the randomness does kind of make it a little unbiased, but if you're kind of having people who have the biggest bag holders verify the network, I can kind of see where there's some biases and conflict of interest there. Obviously, there's going to be a 51 to 50, that 49% voting protocol. So there's always going to be people saying, yes, that was not a legit transaction, voting against that person. And so if they did approve some kind of fraudulent payment or transaction on the network, then there is a penalty that is applied. So that validator will at that point be charged for, I guess, the fees and some kind of penalty fee. And so their Ethereum will be removed from their wallet basically automatically for that transaction. So it kind of keeps people accountable. I just think it's a big shift in the space from going from proof of work to proof of stake, and I can't say I'm 100%. I understand both. I mean, you're saving energy, you're saving electricity costs. Some make the argument of more environmentally friendly systems that will be in place instead of having, the Bitcoin system that is being constantly running, energy costs and stuff up. But overall, I think they two varying systems. I think I see positives and negatives to both. But you could lose some of that decentralization if you've got someone who's holding a good proportion of Ethereum, whether it's a founder or not. They might have more say in this process. And so after doing my research, I kind of did see, varying perspectives on it, but it's definitely interesting to see them do that because I see why they're doing it, but also there are some things they got to figure out before they go completely live with ETH 2.0 because, for example, validator, if they don't verify that transaction, you got to have backup validators to jump in. So stuff like that, they haven't figured out the kinks for it, but they're smart people. They'll figure it out, I think.
Yeah, no, I agree. And I know when I looked at some of the cons, it really discussed how the security standpoint is one of the biggest challenges moving from proof of work to proof of stake, because with proof of work, even though it is consisting more energy with the computing power, is more secure, because there's a lot more difficulty, I'm assuming, with the cryptography on solving the different equations to process the transaction. Whereas with proof of stake, even though you have, more scalability, it's reducing a lot more energy. The security aspect is one of the cons that I'm seeing. And I wonder, do you feel that does Bitcoin have that same challenge when it comes to, because I know that they also move from proof of work to proof of stake, but do you feel that this is also a challenge with Bitcoin as far as with it, even for the Lightning Network example that we went over, from a security standpoint, do you think that they're going to run into those challenges when you think about more of a proof of stake consensus?
I think they each have their own challenges, individually, but I think overall, Bitcoin itself, the proof of work, the reason why Bitcoin was created in the first place was decentralization, security, the lack of any kind of manipulating power, a group, a company, whatever, taking control of the network or the ledger, and I think having the current mining situation just completely will always add decentralization to the process. So that's one thing. I don't know if Bitcoin will have that same issue. There never goes proof of stake, in my opinion. I don't see it kind of defeats the whole purpose of Bitcoin. But definitely there's challenges with it. I mean, whether it's energy costs, or you could say, for example, mining pools. Like, if you have a mining pool that's concentrated in one area, or let's say all the mining pools somehow merged or became more centralized, then that would be a proof of, that could be a proof of stake kind of scenario where it's an issue of somebody holding too much of the currency or the crypto, having more decision-making power over people that hold less, the smaller guy. And so those are, I would say, two common threats are, mining. If the mining pools are somehow liquidated or combined or something happens like that, then you can have a lack of consensus, and that proof of work component kind of goes away because someone can manipulate the system. But ultimately, no, I think proof of work is a more solid infrastructure, just the way it's designed. It creates, it's built for decentralization and for computing power to determine, what is being verified and what's not. And also, it's not biased against whether I hold 0.101 Bitcoin or if I have 50 Bitcoin. I'm still as equal as point to the network. Whereas proof of stake, the larger bag holders and holders of the currency will have become validators of the network. So, I'll say those are the main two differences. I mean, obviously there's more things you can dive into on that, but I think that's where most concern comes is, are we getting away from the whole idea of, we still have blockchain, it's still there, it's still a digital ledger, but is it really deconstructed as being consensus, decentralized, and security, basically security proof?
Now, with Bitcoin, do they have a proof of stake model, or are you saying they only have a proof of work? They have this thing that Ethereum's doing is completely different with moving from a proof of work to a proof of stake model. No other crypto has, to my knowledge. I guess I'm just asking as just being curious. There's not any crypto right now that's trying to move from more of a proof of work to a proof of stake model like Ethereum.
First question, Bitcoin is always proof of work. It's going to stay that way. Otherwise, you eliminate miners. And so I think the ownership and the energy creation of what they call it energy money in a way. And so I think that model will always be in place for Bitcoin. You have other proof of stake cryptos like Cardano. They're proof of stake. There's quite a few others that are popping up. I can see that shift in the market going that way. Not saying that I agree with it, because I think there is, you start getting back to a central component.
Essentially,
As you start, like, for example, like, I hate Dogecoin, but Dogecoin is owned by 28% of Dogecoin is owned by one holder. So, like, how would a proof of stake concept work on that? I mean, that person has all the power.
That's true.
So I think there's different arguments either way. Personally, I think proof of work is the way to go. I mean, that's how it's all started, and I think it's how it should go. But, if you have Cardano, Ethereum, and others using proof of stake in a way that is truly decentralized and allows for voting power across the world, and not just, people that are holding more of that currency to make decision making.
I see exactly what you're saying now. That's the challenge that still has to be, overcome by Ethereum is, as they have more people that are staking in Ethereum, they have to make sure that everything is equal. It's an equal decision-making process, so to speak, where everything is still decentralized and it's not a central authority or a person that has a majority of the Ethereum that's staking it has the most control. So I think that you're right. That is the I guess you could say the one concern. But the proof of stake, it has pros and cons from what I've read. But I think with the proof of work consensus, that's probably why Bitcoin has been viewed. I know there's much other validated reasons, but that's probably why a lot of people look at it as a store of value, just because it's a proof of concept. There's a finite supply, and it's more it's just more decentralized. You're not going to run into that concern with that crypto. But I still feel that they all should be in an investor's portfolio, because I like smart contracts. I think that use case for businesses, for entrepreneurs, for business owners is going to be very essential. But that is one thing that we still has yet to be determined is how that's going to impact people that are staking it, how that's going to have a overall impact on the network. So yeah, that's a very interesting point.
And those reward systems are based off validators. So as a miner, you get rewarded in Bitcoin as you create data blocks on the network and verify transactions. Proof of stake, if you're a top holder, it's supposed to be random who's selected as a validator, but some people's arguments are well, if you're holding a lot of Ethereum and you're becoming a validator and you're constantly getting selected, it's making you more money. You get rewarded based off your verification part of that process as a validator. And so Casper is a 2.0 Ethereum. I like the concept of it. I just think there are some things that cause concern for people, especially the original Bitcoiners that kind of got into it for de-hedging from the dollar, from corporate control, or for just to your point. there is a finite supply, so that store value is different than any other currency in the market because there isn't finite supplies for most of these, and Bitcoin has the true store value through the proof of work concept, but also through a limited 21 million Bitcoins ever in existence. So I think there's something that we can't replicate there, only because it was created in anonymity, and also it was kind of designed that way by someone who didn't, create it for malicious purposes. And so it's kind of hard to replicate a system like that. It's kind of, one in a million, opportunity like that. But, and once you can pull that model, there is ways to, make it similar to Bitcoin. I just don't think there'll ever be another digital gold like Bitcoin. Yeah, no,
I definitely think Bitcoin is going to be the one that we always are going to look at as a store of value, just from the reasons that we've kind of discussed. Now, I know yourself, you're actually invested in Bitcoin mining with some of your other partners within the investment as well. And I kind of wanted to just get your opinion on just the process of Bitcoin mining, maybe some of the estimated costs, for someone that's wanting to actually get into that industry, kind of share your experiences so far with that aspect of the industry.
Yeah, definitely. This has been a very exciting, project of ours. It's something I've always wanted to do, entering this space into Bitcoin. I've always wanted to be a miner, but, it takes, you run these machines that are running hot, create a lot of noise, a lot of energy. You got to have a certain setup to do this. And, until this point in time, I kind of just stayed out of it. I thought I'll just be a passive investor. I'll buy Bitcoin. I'll buy, other assets, and then I'll just kind of build my growth that way. But as the price appreciates, it's harder and harder to, allocate funds towards the price of Bitcoin. So what are the options for alternatives of getting Bitcoin as a reward or for, obtaining it? And so my three buddies and I, we all went to IU, and we just kept in touch throughout the years, and two or three of them being big Bitcoiners, we're just like, hey, why not jump on this opportunity? The reason why the environment got so appealing to us was because you had China leave the market. They banned Bitcoin mining across the country, across the continent of China. So, literally, that was like an eye-opening opportunity for us, which is like, the hash rates are low. Mm-hmm. We just lost a big portion of the network.
More opportunities.
The problem, previous to that, it was hard to get into Bitcoin mining. It was, the network difficulty was high. Obviously, hash rates were high, and so you need a lot of computing power to be able to earn Bitcoin rewards. And so, for us, we're just like, we're not a big company. We founded ourselves as an LLC. We've got, a couple rigs being shipped out now and set up in Wyoming. We just thought it'd be a great time to jump into this market. Reason being, we thought appreciation is one thing. Bitcoin price, when we started getting into this, it was 30,000 a coin. Now we're talking, it's almost 48 up to 50. And so to get a slice of that pie, we want to keep on allocating and earning Bitcoin. And the best way to do it for us was buy a couple rigs and just go ahead and just dive in. We did a lot of analysis. It wasn't a overnight decision, waking up thinking, okay, let's buy some machines. We had to compare, via spreadsheets, what is the cost of electricity? What is the cost of hosting and mining pools? What's the cost of a rig? This current market, they used to be a lot cheaper, but they're 7, 8, 9,000 per unit. And so that's a big cost to, kind of upfront costs that you have to fork up. So
is that, my fault, I didn't mean to cut you off, but the 7 or 9,000, is that to set up like the computers to actually mine the Bitcoin? Is that what you're saying the initial costs were for just the startup costs with actually getting the equipment assembled to be able to mine it?
Yeah, so that cost is actually per a Bitmain miner. And so,
okay.
If you want the top of the line market miner, the S19, like we got the 104, the 104 miners, and so those are the best in the market. I think the 110s might just came out, the S19s.
Yeah.
But that is the cost per unit. So we're buying the Bitcoin mining rig for that cost.
I see.
We to be transparent, spent about $8,400 per machine.
Per machine.
And if you look at even today, like we ordered July 31st, right before the month closed, to just get that order and contract locked in because we knew prices were going back up. And if you look today, we got a couple bids from other companies recently, and they're going for 9,000, 10,000. Some of these.
Damn.
A supply shock. That's what it comes down to. There's so many companies and people getting into mining right now, and so those investments are flowing through, and they can't keep up with that demand. There's not enough miners on the market that you can keep up with it. I saw BlackRock just invested $400 million in Bitcoin mining, so like you got the big dog companies coming in and buying up supply, which is causing a shock. And so it seems like a lot per unit, but we started out with a couple, just a handful to get started. We evaluated several different companies to kind of see which one fit our model, whether it's scalability, growth, current prices. And we actually went with one that we kind of had a connection with. So Blockware Solutions was our first choice. We also compared them with Compass and others. Equally great companies, very notarized throughout the industry and had comparable costs, but we just went with Blockware. So our mining machines are being shipped out to Wyoming now as we speak. They'll be set up there and hosted in the mining facility there. The reason why we went this route, as an investment, we talked about buying a piece of property in Indiana, getting some guys that we know to run electricity, set up, cooling systems and fans, and get the racks set up for storage. There's just a lot that goes into that. It's not just, plugging in a computer and just hitting the on switch and getting on the network and running your mine. It could be that, but it's not that anymore. I mean, people used to mine from laptops. Well, as the network grows and got bigger and bigger, it takes more energy and power to power the network and mine Bitcoin because of difficulty adjustments. And so, hash rates have increased over the years. And so things aren't as easy. When you have more people participating on a network, it's going to take more energy and power to mine. And so now you've got rigs that are designed just for Bitcoin mining. They're Bitcoin miners. It's not just a computer or, a drive. It's a setup system that's made just for mining. And so a lot of companies are developing new ones, and, I think that cost will be driven down with more supply. Like you've got Blockstream who's, creating Blockstream mining equipment. And so they get a subsidiary that is basically creating component parts for miners. And so instead of when a rig breaks, maybe throwing it away, you might just have technicians come in and just replace, this component part or that component part to keep yourself running. So even in that space, there's a ton of innovation happening. But we figured with hash rates being low and, and basically mining from China just exiting the market, why not jump in now? It's a great time to mine. But it's better because, we just had the halving last year, and before that next Bitcoin halving, like it's going to get even harder and harder. And so we've got about 2 or 3 years until that comes into place. So our goal is just to start now and just hopefully get maybe some investors and some other, as we accumulate Bitcoin, using that Bitcoin to scale and grow.
Yeah, and I actually wanted to really discuss the benefits of being a miner in Bitcoin, and you actually discussed it briefly about how you're rewarded for actually mining Bitcoin. Can you talk about how that relates to the Bitcoin halving? I know like every 4 years, the amount that you're rewarded, it actually goes down if I'm correct, if I'm correct. But I kind of want to get your opinion on that, like, how kind of just touch on like Bitcoin halving and how much a miner is actually rewarded based on the current standard now for mining Bitcoin.
Yeah, that's great, because a lot of people don't know a ton about the reward system, and that's what powers the entire network, is incentivizing people like us, or full-fledged miners that have facilities that just work and operate and uphold the network. It's not just transaction fees; it's rewards via creating data blocks. So the halving was it was 25, I believe, and so the most recent halving that happened last year, 2020, cut that in half. And so now it's currently about 12.5 rewards. And so what that means is, when you verify a data block, if you're the winning computer in that transaction, if your mining group is the one that is, verifying and validating the network, and you actually create that block, you're rewarded with a set of Bitcoins. So the current state is 12.5 Bitcoins, which, you can do the math. That's a ton of money.
That is.
But that's the reward of what you get for participating on the network. And so, that 12.5, obviously, it takes a lot of computing power and miners to even contribute to that network and win it. But so that's what creates is the network to even operate. So that 12.5, obviously it seems like, okay, well, you're getting less. You're getting 25, a couple years ago, or 50 or 100 previous to that. That's what creates the momentum of, for one, price appreciation as well. So as you're cutting down the rewards, and you've got an infinite or a finite supply of 21 million Bitcoin and more coming off and being mined onto the network, that's just decreasing that margin of return and also decreasing the supply. And so within the metrics, we may be mining less now. We'll be mining less than 3 years when it hits. But it's going to create a basic price appreciation, because that's just how it's going to work in the network. And so it's cool to see that. It's cool to see that happen. And, it's the way they designed the system. Satoshi Nakamoto, he made it so that everything happens for a reason, and it's being, operating as, he planned for and executed upon. Yeah.
And I guess one of the last things that I wanted to discuss is, so we know Bitcoin has a finite supply of 21 million, and I've read and researched that once it hits that number, a lot of the miners are more only going to be compensated from transaction fees. So how did y'all, I know the 21 million, that's probably not going to hit in our lifetime. When I read online, I think it said like 2140. So we're far away from that. But I guess just thinking long term, I know this probably won't even affect us. But do you think that's going to have an impact on? Do you still feel that miners still will be successful after it hits that 21 million? I know the transaction fees will help, but what other things will incentivize a miner other than transaction fees if it's already hit its finite supply of 21 million? It's just something I think about. I'm not sure if that's how that will have an impact on miners once it hits that supply, that maximum supply.
I've had discussions with people on that very thing, because obviously it's way off in the future. It won't be my lifetime. It'll probably be my kids.
Yep.
Maybe they'll be mining Bitcoin, who knows? For longevity of any company, you got to think about what's the end goal here. And I think the transaction fees on the network will be enough to support it, because it's going to be such a widespread. The hope is be a widespread use case where everybody's using Bitcoin, from retail to institutions, micropayments in El Salvador and possibly Cuba. It's kind of the most recent discussion. The whole world's going to be participating, and so they may have to adjust transaction fees to make it still equitable for people to send Bitcoin, but also for the miners. And maybe that's at higher speeds, maybe it's smaller pieces of transactions that you're getting, but it's on a larger scale. And so I think with that comes some changes in the future to the network, but I think even just having transaction fees alone will be able to support it, incentivize people to use it. As you can see across the country and the world, there's Bitcoin mining companies that are using, oil and gas, burn off as components, using solar and winds. I think as energy costs don't become as big of a variable cost for miners, I think there's going to be a shift in some of that. Whereas a company, you're spending less on this and getting more of that, So I think if you look at, most transitions from things as we go on and advance as a society, I do think there will be less costs up front, and maybe less costs and maybe higher, same amount of transaction fees, but it's going to be on a larger scale. And I think if you can decrease some of those costs, I think you can benefit just as much as a miner from that in the future. But, we don't know yet. We will see as we get closer to that time.
Yeah, exactly. No, it's definitely being our kids' time, for sure. Just kind of one other thing that I thought of. I listened to someone that also they're in the crypto space as well. His name is Hill Harper. He actually created the first. Him and his team created the first Black-owned digital wallet. It's called the Black Wall Street. And he recently compared Bitcoin to gold from the standpoint of when we were investing in gold, or when people back in the day would invest in gold, at first it was in bars, and now the way we look at gold is in ounces. And he said that the same way that gold was identified with the way we transact with ownership, that's the same way it's going to be with Bitcoin, where once we hit that finite supply, it's going to move from Bitcoin to Satoshis. And I kind of wanted to get your opinion on that. Do you see it being kind of like how gold was when we had ownership in something? We would say back in those times we had 5 or 6 bars of gold, but now it's ounces. Do you feel like the denomination of the currency will change once it hits that finite supply? Will it move from, instead of saying you have 3 or 4 Bitcoin or 0.0012 Bitcoin to actually Satoshis? I think it may end up transitioning into that. But wanted to get your opinion on, do you see that happening once it hits that finite supply?
Yeah, that's a great point. I love that. It's very forward thinking to see what happens after we hit 21. What's going to happen next? And we'll see some of those fractional reserve payments happen, sooner than that, because even it may not be a Satoshi level micro payment, but it could be, 0.1 today is going to be 0.01 in the future, because as the price appreciation grows, we have to use fractional amounts.
Yep.
And that's the beauty of it. You can always divide. It's a divisible currency. Whereas gold, you can break it down so many pieces, and you get to a point where it's like, okay, I can't even find this thing, it's so small. Same concept, you can always break something down smaller into halves and halves. But Bitcoin is even more divisible, because it's got, you can always add a zero in front of something. So, to your point on Satoshis, I love that. I think it's going to be, we're buying, halves of Bitcoins and full Bitcoins these days. And they're saying, who knows, a couple years from now, we may be using fractionals. And to be a transferable system in the form of micropayments, you have to have small amounts. And so as that appreciation grows, we're just going to keep breaking it down small and smaller to the point where it probably is, a Satoshi size payment. It's that. So that's kind of where it has to go if you're going to have everybody participating on it. I mean, there's 46 million, I believe, millionaires and 21 million Bitcoins. So not even every millionaire can have Bitcoin. So if you think about that in your head, it's kind of an astounding, it brings it to fruition how that payment can be broken down smaller and smaller as the value grows. And so
Yep.
I do think that will happen eventually. I don't know
Yeah,
when, but
I think the fractional is going to have to eventually move in that direction in order for it to appreciate and to have more people that can actually invest into it. It's no different with just with the gold example, but also with stocks. A lot, the fractional shares thing was something, I don't know when it started, but I don't think fractional shares was around 20, 30 years ago. So it's almost the same thing. You have to create a way where more people can get in the game. And so they can be able to invest in it and still have some ownership in it. So, yeah, I definitely see the fractional it going in that direction in the future. But yeah, man, Alex, I thank you so much for this conversation. I feel like this
anytime.
one, we really got in the weeds. The first one, if you all are now just hearing of Alex, definitely check out episode 47. That one was more of an overview, but this one we went in depth, and I hope you all.
Better, I think.
It was good because I've been doing more research on it, and my level of knowledge in the space has increased to somewhat. I still I'm learning every day, but yeah, it's just refreshing to have these conversations with individuals that have a passion for the space as well.
And I'm happy to jump on, anytime, Kevin.
Yeah.
You take any of these topics we discussed. There was 5, 6, 7 topics, and we spent a full 40, hour, 2 hours on any of these topics. I mean, we talked about mining for an hour if we wanted to. So I like how we hit kind of some broad brush stroke topics, but we also got into some heavy content and talked about some of that stuff too. So yeah,
I agree.
I think these are all important topics, and obviously, you're good at facilitating that. So thanks for setting this up, and I always enjoy being on the show.
Oh, of course. And is there any last words that you want to leave with the audience, or even your social media handles on how people can learn more about you and also what you're doing with the mining? If you have any website or anything, set up at this point in regards to that.
Yeah, no, I appreciate it. My friends and I, obviously, we got the company. It's called Corsair, Corsair Mining LLC, and that's our company. So we're going to start getting to the media space, as in my other two friends are in the consulting and media side, and so we're going to use that as a channel to post our separate some podcast information. We're going to do some other talks and information, and some marketing components as well. Eventually, the goal is to get to some consulting, and so we'd love to be part of the consulting space. So it's kind of my shout out to them, to the team. But in general, just the goal is to keep on educating and teaching people more about Bitcoin. For the audience listening now, I mean, you've heard Kevin's constantly having experts on the show. He's got guys like Greg Foss. I mean, I'm honored to even be on the show, let alone come up after Greg Foss, one of the big guys. So just stuff like that. I mean, just listen to this content, take it to heart, and if the warnings now, if you haven't heard about Bitcoin or this industry, I mean, just take your time and do your research. We talk about white papers. There's websites out there. There's videos. There's so many ways to dip your feet in and get them wet in the space. Reach out to either one of us. We're probably happy to guide you in that situation. So we don't know it all. We're still learning. I think every day I'm listening to a podcast or reading an article that just like blows my mind on what's coming next. And so evolution of the space is huge.
It totally is. Well, Alex, thanks again, and everyone, thank you for tuning into the show, and we'll see you next time.
Cool. Thanks, Kevin.
Of
Appreciate
course.
it.
No problem.